Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name, Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She is a personal financial advisor. You can contact her with the email hongzongyuan@vcsc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today we're going to share with you about VIC. VIC is the largest private conglomerate in Vietnam with a wide range of operations, including residential real estate development, retail real estate leasing, hospitality development and operation, automobile manufacturing, and technology research. As you can see on the screen, this is the report which was collected by Viet Capital Securities about VIC on 27 February 2023, with the current price is 52,900 Vietnam dong. Target price 94,900 Vietnam dong. Upside to target price more than 79.4%. Dividend yield 0%. TSR more than 79.4%. Broad-based business improvements to offset Vinfast loss. We reiterate our buy rating for VIC and increase our target price by 6.2% to 94,900 Vietnam dong per share, which is mainly due to our 18% and 7% higher valuations for the industrial and retail leasing segments, respectively, as well as a lower net debt balance at end 2022. We remain bullish on Vingroup's strong exposure to Vietnam's rising affluent class via its real estate arms Vinhomes, VHM, Vinhome Retail, VRE, and Vinpol. We forecast VIC's 2023 forwards EBIT at 10.2 trillion Vietnam dong, $433 million compares to an EBIT loss of 11.5 trillion Vietnam dong, $489 million in 2022, as we expect strong property sales recognitions and a recovery of the retail leasing segment to more than offset EBIT losses for the industrial and hospitality segments. Our 2023 forwards and 2024 forwards EBIT are 15% and 4% lower than our respective previous forecasts, as we project higher EBIT losses for both segments. A sum of the parts valuation using the current market's valuation of VIC, VHM, and VRE suggests the implied market valuation of VIC's effective ownership of other assets, including Vinfast, Vinpearl, and Vinmec, Vinschool, at $1.5 billion compares to our valuation of this asset at $2.6 billion. We believe the upside of VHM and VRE, which is based on our valuations for the two stocks, makes VIC's current share price attractive. Downside risks: slower than expected sales launches of new mega property projects, slower than expected car deliveries, strong unbilled bookings of property sales, and recovery of retail leasing to secure 2023 forwards profits. We expect strong unbilled books from the Empire and the Crown, accounting for 71% of total unbilled book sets of end 2022, at 107.6 trillion Vietnam dong, $4.6 billion to support VIC's property sales segment in 2023. Meanwhile, we expect the gross margin of the retail leasing segment will continue to improve, which will be driven by higher retail rates and higher occupancy. Slower than expected return of Chinese travelers and weaker consumer spending to affect the hospitality segment's recovery. We believe the recovery of international tourism will support the improvement of Vinfast's occupancy and room rates. However, we believe a slower than expected return of Chinese travelers and weaker domestic consumer spending will result in a longer than expected recovery. As a result, we lower our revenue forecast in 2023 for the hospitality segment by 6% to 9.1 trillion Vietnam dong, $165 million, more than 21% year-over-year. We forecast 2023 to 2025 forwards revenue CAGR up 27%, with which supports 2025 forwards EBIT to turn positive to 2.2 trillion Vietnam dong, $93 million. Various capital raising plans from VIC to support Vinfast US expansion. In terms of Vinfast fundraising plan, VIC is looking for various fundraising opportunities from Vinfast potential IPO and the international debt markets. In addition, we expect VIC and its chairman will continue to support Vinfast developments. Per management, Vinfast has received an air permit, which is the final permit is required, and is getting the North Carolina site for its factory ready to start construction. Vinfast continues to plan to get the US factory ready for trial production by end 2024. We project an aggregate 2023 to 2025 forward capex investment of 100.7 trillion Vietnam dong, $4.3 billion, which will be funded by our projected aggregate net debt increase of 108.9 trillion Vietnam dong, $4.6 billion in the period. Now we move to the next part, 2022 recap. Recovery of core businesses supports 2022 positive profits. VIC's 2022 results. Property sales. VHM's underlying property sales, including BCC and bulk sales transactions recognized as financial income, amounted to 81.4 trillion Vietnam dong, $3.4 billion, less than 14% year-over-year. VHM delivered over 3,500 units at the Empire in Q3 and Q4 2022, contributing 69% of 2022 reported property sales revenue, or 43% of 2022 underlying property sales revenue. Leasing. Recovery of retail leasing and a minimal tenant support package in Q4 to Q2 to Q4 2022 support VRE's strong profits growth in 2022. Hospitality. The number of room nights sold increased 60% year-over-year, mainly thanks to the recovery of tourism, with the highest contributions from Phú Quốc, Đà Nẵng, and Quảng Nam. Industrials delivered 24,000 cars, including 7,400 EVs and 60,000 e-coasters in 2022. Industrials, high EBIT loss in 2022 was due to the recognition of the accelerated depreciation of assets related to the end of ICE vehicle production and production costs for new EVs. Financial income, including the pre-tax gains from the recognition of VHM's bulk sales transaction at Grand Park, the Empire and the Crown of 16.1 trillion Vietnam dong, $682 million in Q1 to Q3 2022, to 5.6 trillion Vietnam dong, $250 million from stock sales of one Mount Root in H1 2022, 6.9 trillion Vietnam dong, $292 million from the transfer of wind waters Nha Trang while managing and operating the assets under a commissioned basis in Q2 2022, and 4, a bulk sales transaction at one Vinpol project of 1.2 trillion Vietnam dong, $51 million in Q4 2022. Net profit after tax MI, supported by 1, the on-track delivery of the Empire, 2, improved operational performance of the leasing and hospitality segments, and 3, divestment gains. 2023 outlook. Broad-based business improvements to partly offset higher projected EBIT loss for Vinfast. Property sales, mainly driven by retail sales at the Empire, the Crown, Ocean Park, Smart City, and Grand Park. Leasing, our 2023 forwards growth forecast is supported by 1, our expectation for no COVID-19 tenants support packages. 2, full-year contributions from new malls such as Vincom Mega Mall, Smart City opened in 2022 in April. And 3, improving tenant sales and occupancy rates thanks to a recovery in the retail market. Management targets to launch 2 malls, VMM Grand Park, GFA of 46,000 square meter, expected to launch in H2 2023, and Vincom Plaza, Hà Giang, GFA of 10,000 square meter, expected to launch in H2 2023. These new malls will raise VRE's total retail leasing GFA to nearly 1.8 million square meter by end 2023. Hospitality, we expect the rebound of international tourism will continue to drive Vinpearls in 2023. However, we lower our revenue forecast as we are more conservative regarding tourist demand and consumer confidence. Industrials, we continue to project 30,000 car units to be delivered, more than 25% compared to 2022, which will partly be EV models as Vinfast completed the delivery of its backlog of ICE cars in 2022. Others. Revenue growth is mainly driven by additional construction services for bulk sales transactions that VHM has signed with partners. Financial expenses. We decreased financial expenses due to our lower projections for 2023 forward debt balance and minimal foreign exchange losses, as we expect the Vietnam dong will be stable compared to US dollar in 2023 forward. And let's see on the screen so that I will show you guys more information. Tier 3 VCSC's industrial segment performance, revenue, and EBIT forecast by segment. VCSC's assumptions and forecasts for key segments. Property sales, VCSC comments, continues to capitalize on strong demand with its proven brand Vinhomes, owns the biggest residential land bank in Vietnam with Vinhomes land bank of 168 million square meter site area acquired at various stages of getting final approval. Motions to rebound deliveries of low-rise developments and bulk sales. 2023 forward underlying revenue and EBIT to grow on the back of strong sales at current mega projects. Leasing. Leading shopping mall owners and operator with 83 Vincom retail malls, nearly 1.75 million square meter retail GFA as of end 2022. Robust and steady growth from one, a solid pipeline in new mall expansion, and two, improving operating performance at existing malls from increased foot traffic with an upgraded tenant mix, along with the expected rollout of major lines. Hospitality, Vinco had a 46% market share in Vietnam's five-star hotel segment in 2018 based on its number of rooms. 32 hotels and resorts with 15,400 rooms. Rapid expansion in 2016 to 2019 and 18 dropped earnings, mainly due to granted expenses of villa condotel sales. Industrials, Vinfast officially stopped receiving orders for ICE models in July 2022 to fully transform into a pure EV producer. Vinfast had received 70,000 reservations for VF8 and VF9 as of end 2022. Losses mounting in exchange for market share in the medium term. Active capital raising plans for Vinfast. Vinfast announced this will become a 100% EV company by end 2022 and completely shut down its production of ICE models. Vinfast officially stopped receiving orders for ICE models in July 2022 to fully transform into a pure EV producer. According to the latest data disclosed by management, the new EV models have been well received in the both domestic and global markets, with 70,000 reservations as of end 2022. Vinfast delivered the first batch of VF8 models to customers in Vietnam in September 2022 and exported the first batch of 999 VF8 car units to the US in late November 2022. The first batch of VF8 that is delivered to the US is expected to start delivery in March 2023. Vinfast also announced it will reduce the MSRP of the VF8 City Edition from $55,500 to $49,000 for the eco version, and from US 62,500 US dollar to 56,000 US dollar for the plus version. We maintain our projection for the number of cars to be delivered in 2023 as 30,000 units, more than 25% year-over-year, which is purely from EV models, as Vinfast completed the handover of SICE vehicle backlog in 2022. We forecast our 2023 to 2025 forward car sales volume CAGR of 29%, which is supported by the expansion of a nationwide charging station network, as well as the company's global showroom network expansion. Currently, VIC has completed most of the EV infrastructure in Vietnam, including the VinES battery production plant. 300 million US dollar investment expected to start operation in Q4 2022 and charging stations nationwide. Therefore, we expect VIC's CapEx required in 2023 to 2025 forward with our projected average CapEx of 33.6 trillion Vietnam dong, 1.4 billion US dollar per year to mainly fund Vinfast expansion to international markets, including global showroom expansion, the production plan in the US, and the production of new model lines. This is 24% lower than our previous forecast, as we expect a more conservative expansion investment in the US, which is largely subject to market conditions. Regarding its production plant in the US, Vinfast has received the air permit, which is the final permit needed, and is getting the site ready to start construction. Vinfast continues to plan to get the US factory ready for trial production by end 2024 per management. Once this facility commences operations and final assembly, Vinfast customers in the US can expect to qualify for a tax credit under the Inflation Reduction Act, which is subject to, among other factors, their income eligibility, as well as Vinfast's ability to meet requirements on battery components and critical minerals. Valuation. We continue to value VIC by using a sum of parts valuation and derive our target price of 94,900 Vietnam dong per share, which is detailed in the figure below. We increase our target price by 6.2% compared to our previous target price of 89,400 Vietnam dong per share, due to high valuations across segments, excluding the property sales and hospitality segments, and a lower net debt balance at end 2022. 1. Property sales. We lower our valuation as we decrease our aggregate 2023-2024 forward pre-sales by 10% due to a weaker retail pre-sales outlook as a result of high interest rates. 2. Retail leasing. Our higher valuation for the retail leasing segments comes from 1. Our higher 2023 forward gross margin for the segments as a result of higher rental rates and higher occupancy. 2. Our higher revenue recognition and gross margin for the property sales segments and 2023 forwards per the company's guidance. And 3. Our higher projections for small launches in 2024 to 2027 forwards with an average additional GFA of 274,000 square meter per year compares to 240,000 square meter per year as previously. 3. Industrials. The higher reported assets value of the industrial segments at end 2022 compares to the end Q3 2022 leads to our higher valuation. 4. Hospitality. Our lower valuation is mainly due to our more conservative projection for Vinfast's profitability pathway as we cut our aggregate 2023-2024 forward segments revenue by 6% due to the slower than expected resumption of tourist activities between Vietnam and China, in addition to concerns about domestic consumer spending. 5. Healthcare and education. We forecast total revenue to grow at 15% CAGR in 2023 to 2025 forward. Our valuations for VHM, RNAV approach, and VRE capitalization rates approach contribute a total of 83,000 of our RNAV for BIC. We continue to use a book value approach for our valuation of the industrial segment as there are no public details on CapEx and delivery plans in 2023 to 2025 forward. We believe the upside of VHM and VRE based on our valuations for these two stocks make VIC's current share price attractive, uh, especially following the um, substantial correction of the company's shares price. Please find more details for the property sales and retail leasing segments in our 21st February VHM update report and February 17 VRE update report. Valuation summary. A sum of the parts value using the current market valuation of VIC, VHM, and VREs suggests the implied market valuation of VIC's effective ownership of other assets, including Vinfast, Vinpulse, Vinmec, and Vinschool at $1.5 billion compares to a valuation of $2.6 billion. Recommendation history. And the last one is financial statements. Yeah, and that brings me to the end of my update today about VIC. So if you want to open a legal trading account, don't hesitate to contact with us with information on screen so that we can assist you. Hope you guys have a nice day. Thank you for listening and see you next time.